Interviews with business owners and veteran executives who share their wisdom and expertise to help you de-stress, free up time, and make more money. Profits of IT. Welcome back to the podcast, Profits of IT. I am Jim Punzenberger. I am founder of Neutron Solutions, the company that will help you generate leads and appointments from LinkedIn and email. Today, I have with me Mike Harvath. Mike is the CEO of Revenue Rocket, and he is the guy to go to when it comes to mergers and acquisitions in the IT space. Welcome, Mike.
Yeah, thank you. Thanks for having us.
So, Mike, to start out with, you want to just tell us a little bit about yourself? Tell us about Mike. Who is Mike? And tell us a little bit more about Revenue Rocket also, please.
Absolutely. So a little bit about my story. I started in IT back in the 80s. Actually worked for Apple Computer and helped them design the first Macintosh computer. Went into then working in distribution for a company in Arizona called Microage, and grew there for a number of years, and then really started my first company. Was able to successfully grow that IT services company to about 10 million in revenue and sell it. And then ultimately joined that company, and we grew through acquisition, and ultimately sold that business as well in the late 90s. After taking a little time off, I started Revenue Rocket. So certainly have been doing this for, now over 20 years.
20 years.
And Revenue Rocket's really all about helping companies grow. IT services companies grow. So we really do two things for our clients. Half our business is focused on mergers and acquisitions and facilitating those deals. The other half our business is focused on advisory services around growth strategy. We have, proprietary program on that side that have, certainly worked with lots of firms. We work with hundreds of companies in 30 countries since our inception, and are thrilled to be here.
Cool. So, so not only do you help IT companies with buying and selling of companies, you also help them with growing and preparing for as ultimately, I guess, to grow their company and to prepare to sell it. Is that correct?
Yeah, absolutely. So, you think about what we do, we facilitate 2 to 3 M&A transactions a month. So we're very active in the IT services space and M&A, and have been, blessed to have great clients that we can help either buy other companies or help them sell. But, our advisory business is really about helping companies be top quartile performers for both revenue growth and profit realization. That proprietary program is called SVP, and it stands for Specialize, Verticalize, and Productize. And, we've probably helped upwards of, 250 clients or so in that space over 20 years, helping them get to the next level, helping them really grow their business meaningfully, not only the top line, but also the bottom line.
So what's one actionable item that I could take away, or so SVP, what's like if I wanted to do that and help that use that to grow my business, what's like the first step in the process?
Yeah, so the fundamentals behind SVP are essentially that you're going to specialize on a core set of technologies. For some people that's managed services. For other people, it's maybe they're app modernization guys or custom developers, or for others, maybe it's an app implementer. Maybe it's someone that would implement Salesforce or Microsoft Dynamics or something. And then you want to sell into a very, what we call very narrow vertical market. The optimal growth strategy really focuses on a market. So you can have repeatable processes and repeatable, engagements. And in some cases, develop IP around that. That's you can sell to that client base. And then ultimately, you want to be able to productize those offerings. And when we say that, essentially that has to do with making your services easy to buy, not hard to buy. And I think a lot of IT services companies don't make their offerings that easy to buy. And so certainly, as you think about your market, I think where most IT services companies make a mistake is they either try to cover too big a watershed on the types of work that they do, the types of solutions that they might implement, or the technical work per se. They also try to service too many different types of markets, oftentimes taking a geography sort of focus versus a vertical focus. We know from experience that those companies that tend to be more aligned vertically outperform the ones that don't. And it's not just us that say that. I mean, certainly Microsoft says that, and Salesforce says that, and a variety of other vendors about their partner ecosystem. So we know that's a much faster growth path, and one that involves a lot more profitability for those businesses. And then, being able to make it easy to understand and easy to buy on behalf of the client really is the third leg of the stool.
Got it. All right. And so after I've been growing my business and I'm thinking about selling it, what's the basics? Like, I guess, are there some basic terms that I need to know about? I know when we were talking earlier, you mentioned a term called Ebitda. Is there other terms also? And like, what is Ebitda to start? And are there other terms that I need to know if I'm thinking about mergers and acquisitions?
Yeah, if you're thinking about mergers and acquisitions, regardless of whether you're buying or selling, it's important to run a healthy business. And a healthy business is one that makes a reasonable amount of profit. This is a simple concept that I think a lot of entrepreneurs sort of miss. They feel that they're in the investment mode and that they're growing revenue. And as they're growing revenue, they're building value in the business, even though they may not be making money. And I think, EBITDA is a term that focuses on a measurement of profit. It stands for earnings before interest, taxes, and amortization, depreciation and amortization. So it's EBITDA. Sometimes you hear it as EBIT. So that doesn't include depreciation and amortization, but EBITDA includes depreciation and amortization. And it's different than net income. Net income is essentially after those things. EBITDA is before interest, taxes, depreciation, and amortization. So it's usually a little higher number. And it really is a material measure that most companies are valued by in the IT services space. Typically, companies sell for a multiple of EBITDA, depending on a variety of factors. That multiple can be different, but it is a multiple of profit that ultimately your business is sold on. Now, with that said, most companies see multiples of profit advertised about companies. Like, hey, you might have this level of profit or this percentage of revenue that you can expect to sell your business for. The only reason that is the way it is because in private to private transactions, very rarely is there a reporting on what EBITDA was or what profit was. That's something that buyers and sellers don't disclose.
Mm-hmm.
So when you look at comparables, they'll usually always show some number as a multiple of revenue. But you should know that that is not the index for which value is created in your business. It's based on profitability. So it's important, especially for small business owners, to realize that enhancing the growth of profit, the profitability of the business, is the major value creator in your business.
So at the end of the day, the more profit that my company makes, the more value it's going to have to a buyer.
That is correct.
Got it. And do you have any tips on then making my company more profitable so that it'll be more valuable to a buyer?
Yeah, some of these tips kind of come from Henry Ford and what Henry Ford did. When he started making automobiles, as most of you probably know, he was the first major automobile manufacturer to use an assembly line. And he had a famous saying that said, you can buy any color of Model T you want as long as it's black.
Black.
And the reason for that was that the efficiency that comes through the assembly line process and limiting of choices is a profit multiplier. It's a way to enhance profitability. You need to have less you can lean on the process, so you can do more work with less people, frankly, because you have a process rich environment. So I would encourage people, to think about process first, people second, and technology third. A lot of times we hear people, process, and technology. It's really got to be process first, people second, then technology. And also to do what you do and craft a plan where you can be number one or number two in the market you choose to serve. This is called a relevancy test. If you're trying to do too much for too many people, it's very difficult to architect a strategy to be number one or number two in the market you choose to serve. So it's a good way to think about, narrowing your target market. Because if you narrow your target market, it's much easier to effectively operate and to, create an assembly line in many ways for delivery, if you will, but also to do marketing. A lot of IT services companies in particular struggle with marketing. They struggle with investments in marketing and say, well, marketing just doesn't work. We can't ultimately get to a place where marketing is material enough to make a difference. I think the main reason that is because if you're trying to market to anyone with a checkbook, it's very, very challenging for you to stand out and be a number one or number two provider. Where if you're very much more narrow, then you can do target marketing in a way that you can't otherwise. And so I think some of those general principles will help you to, stand out, build a great company, build one that has got a lot of profitability potential, one in which you can eliminate competition. If you've read the book, Blue Ocean Strategy as an example, that's in many ways the theories that they put forth in that book is, don't be in a red ocean strategy where you have a lot of competitors and a race to the bottom on price, but create a blue ocean strategy, one that's highly differentiated and able to stand out amongst competitors.
So what are like examples of blue ocean strategies that IT services can deploy?
Well, in some cases, it can be a very narrow set of technology solutions sold to a very narrow market. We see companies that say focus on. We helped a company. This is a real world story. A managed service provider that used to sell from a geographic base in the Midwest, in a city in the Midwest, and sold to anyone in that geography. And and when we started working with them, it was fairly small. It was about $1 million in revenue. And we helped him to align a strategy that would focus on servicing small independent law firms. And when I say small independent law firms, I mean firms with less than 6 employees. And that would include ancillary staff and attorneys. And as we architected that strategy, it became clear that this was a void in the market and that he could develop a very narrow marketing strategy and delivery strategy in order to attract and retain and grow those customers. Now, if we fast forward 5 years or so, this is a business that's now 13 million in revenue. It's facilitated 2 acquisitions and is one of the market leaders. It does pass the sniff test, right? That it was a business that that is number one or number two in the market they choose to serve. They've expanded their services, which is oftentimes an opportunity once you get the beachhead in the narrow market, to also provide web marketing services for that same, under 6 employee law firm. So very much a success story, but as customers in all 50 states in the US and Canada, certainly been a very interesting business to watch grow. Now, could he have done that in his geography, selling to everyone that was in the geography? Maybe, but certainly it would have been a much more competitive strategy, one with a lot lower margins. This business produces over 20% Ebitda margins. So he's very, very profitable, probably in the top 3% of managed service providers globally. So very interesting case study when it comes to that. Now, it does take a leap of faith because most people, that's a big change, right, for them, for what they've built. And change is hard. You have to be able to have a good confidence that the model's going to grow and that you're going to, invest accordingly. But it's just one example of the many hundreds of firms that we've helped sort of implement this strategy to help them grow.
So focus, basically it comes down to is narrowing your focus on your offering and who you're going to serve so that you can systematize it and process it and kind of cookie cutter it, so to speak, make a cookie cutter that works for all your clients versus having to make different cookies for every client.
Yeah, I think that's a good way to put it. I mean, it's certainly not about a one size fits all, but it's certainly about a scenario where one size fits most. And any customizations are limited, right? Very limited. So that allows you to optimize profitability and certainly gives you far better marketing efficiency. And you can begin to see a very important return on investment on marketing. And digital marketing is really critical now. I mean, I don't care what business you have, and due to COVID in some cases, but many others have been doing digital marketing for a long time. But you've got to drive client, you got to drive eyeballs to your digital assets and ultimately get clients to raise their hand and say they're interested in working with you. Your ability to attract and retain and grow what we call greenfield customers, new customers, is going to be where the vibrancy is in your business. You can't continue to lean on the existing customers and expect you're going to materially grow your business. You may do more work for them, but you're not going to grow the business in a way that's meaningful. It's going to be kind of single digits or low double-digit percentage growth year after year. If you're going to want to do what this client of ours did, you've got to be able to have a strategy to attract people that don't know anything about your business and turn them into customers. And that gets a lot easier when you focus on a highly differentiated offering that doesn't have a lot of competitors, in which it's a blue ocean strategy.
Got it. Cool. So I know that you have, moving on here, that you have a podcast yourself, or your company does. Can you tell us a little bit about that?
Yeah, absolutely. We do a weekly podcast here at Revenue Rocket that's dedicated to IT services companies. We cover a wide variety of topics in that podcast. It's called the Shoot the Moon podcast by Revenue Rocket. You can find it on Apple Podcasts and on Spotify. And certainly would welcome your listeners subscribing to that podcast. And we address all kinds of topics around mergers and acquisitions and growth strategy. And we've just recorded recently our 50th podcast. So we're a little over a year old. When we started the podcast, we didn't do them every week, but certainly in the last 6 months or so, we do them weekly and publish them accordingly. So I would encourage you guys to find that. You can find them on our website as well at revenuerocket.com.
So go to Revenue Rocket and look for the podcast Shoot the Moon. Anything else that if somebody wants to learn more about either mergers and acquisitions, or B, your your SVP strategy,
Yeah.
What's
Yeah, certainly there's a lot of digital content there on our website at revenuerocket.com, but also just drop us a line. You can fill out our info form and send us a question online. It'll come to us an email immediately, and our team will respond to those questions. If you have really anything within the bounds, of course, provided you're an IT services company. I mean, that's where expertise lies. That's where experience lies. We can't help you, unfortunately, if you're outside of the IT services world. But if you're interested in asking questions about growth or M&A, or getting some advice about thinking about your business and how you're gonna move forward with it as we move through 21 and beyond, certainly drop us a note.
So there's the form on revenuerocket.com. There's, I guess, you have a contact us form, and drop a note in there, and you guys will respond lickety split.
That is correct.
All right. Well, great. It's been great having you on here today. I've learned a bunch myself about M&A and adding more profit to an IT services business. Any last closing remarks?
No, just it was a pleasure coming on the podcast today. I certainly look forward to hearing from any of your listeners that are in the IT services space and exploring how we might be able to help them get to the next level. With that, thanks for having us.
Thank you. So, Mike, until next time, it's been great. So bye for now.
So long.
Thank you for tuning in to the Profits of IT. Please smash that like button, subscribe, and share.